Let's bring in Vikas Khemani from Edelweiss then. He joins in on board. Vikas, hi, morning. What's up with the market? Do you think the correction is over and done with, or is there more to go up until the budget?
Hi, good morning. I think, correction has just started, and probably, in my opinion, there's a little more room to go. I think we have seen, continuous supply of money coming through and also continuous supply of paper. And I guess, this continuous supply of paper is also kind of, keeping the market in a sort of hold and correction mode. So in my opinion, this correction and consolidation was required for some time, and I think which is what is setting through. So in my opinion, a little more correction both in value and time terms is required, and probably just next 1 or 1.5 weeks it might remain weak and maybe can pick up the momentum around the budget.
So what really has precipitated this correction? Fresh supply, extended valuations, or the global setup?
I think, Nikunj, it's a bit of everything, because I think, we had a supply of good news, which was as I think whatever government was sort of promising, that continued to deliver. So as an event takes place, you sort of see profit booking coming through, and I think after a sharp rally, always I think there's a tendency to book profits. And when we see lots of paper are still coming through, and I think there's a good lineup till next 3 to 4 months. So I think there is a tendency to do a little bit of switch from one stock to other stock. So I think a combination of all these things, I think, in my opinion, is leading to this. And I don't think, given the supply of paper coming, you will see a steep rally sort of taking place even post budget. So I think we have a reasonably large supply of paper coming through, and that needs to be absorbed. And I think it all depends on what kind of inflows we see, whether it matches or it sort of exceeds significantly, and that I think going to hold the key.
So at Edelweiss, what's the call on MTPC? Is it a subscribe?
Oh, definitely, yes. I think, this will be, in my opinion, will get a good response from institutional investors, as well as, in my opinion, I see a lot more sort of non-institutional participation also going through. Stock is at a reasonably very good value range right now, and if you take slightly longer term view, I think holds good promise. Power sector is not over. I think NTPC is the leading company in the power, and I think there's a good CWIP which will come into operational in the next few years. So I think it's a good stock, and valuations are right now in favor. So according to me, it will be a sounding success.
Valuations are attractive, but it's also a boring business to own. Nobody likes utilities. It's a fixed return business.
And maybe that is where the opportunity lies, because I think you will be surprised to see the boring businesses end up giving more returns many times. So, but as I say, I would tend to think that if you get boring business at right valuation and with low volatility of the returns, I think probably that's a perfect stock from a investment perspective. So I do like the stock at this point in time, and you have a good growth coming in over the next years. So you have most of the things in your favor. And I think if government has to continue its reform process, the power sector reform has to happen. And I think, in my opinion, you will see some activity happening on the power sector in the next 3 to 6 months that could act as an additional trigger for the stock.
Which are some other boring businesses you like? Like you said, that sometimes it's good to own boring businesses.
Absolutely, there are many such. Where you have reasonable, you don't have sort of lot of volatility and steady cash flows are coming through, and utility is a classic example on that. So there are many such. I think if you look at, I like businesses like what Adani Port has, good cash flows. You have large assets. You have unutilized capacity going through. As the volume keeps on growing, you start making money. So there are many such, especially in the utility and infrastructure space, provided the cash flows are decent, cost of projects are decent, and there's a good opportunity to make money, and some point in time you have visibility to make dividend yield. I think those are the assets to go for. We had NHPC, which was trading some time ago at 0.6, 0.7 time book at 4% dividend yield. Again, very, very boring business. But if you see, that has given in this year 60% return, which probably most of the banks would not have given, or most of the banks would have given. So in my opinion, you look at boring stocks at undervaluation with good cash flow visibility. That's where you make money.
So highlight some of those stocks for us. Where can one still park money?
Would like to avoid the stocks, as I said, that within the utility space, there are many such stocks, and I mentioned few. I mean, NHPC was the one, and still it continues to remain attractive. You have Adani Port, I said, is the one which continues to remain attractive, and from my point of view, from our point of view. So I think there are many such stocks which you could look at, but I think most of the time you will not see money chasing these stocks. They will be out of flavor, and I think only patient investors would look to invest into from long-term perspective.
Because many experts are also of the view that this year's budget will be more like a no event. Finance Minister pretty much has outlined that this year's budget will be a responsible budget. The fiscal deficit number of FY14 is already out, so we know the tone what the Finance Minister will be taking. Would you agree with the broader assessment that the cat is out of the bag, budget may not generate too much of upside?
So yeah, I mean, there are two parts to the budget, whether it's a good budget or a bad budget, or there will be a surprise element in the budget or not. So I think if I hear your question right, I think probably the surprise element would be missing in the budget, as I think the outline has been already laid out by the government and the ministry. So I think to that extent, yes, you are right that surprise element is missing. But I think more importantly, currently markets are looking for a direction. Markets are looking for implementation of the what government is intending to do. And I think to some extent it has been outlined, and I think probably market would look reinforcement of that in the budget, and I think to some extent probably finer details around what finance minister is intending to achieve the fiscal deficit through. And if it is, let's say, through huge amount of heavy taxes and all, probably market may not like it. So the modalities and how he's going to achieve that 5.3 magic number, what is going to intend, the statement of intention, I think he has to put through in the budget, and those details will be important from perspective. But I think if I were to look at, say that will market rally because of the surprise element, probably answer is no. But I guess that will be a reinforcement of the more or less what they have been saying.
Do you worry about consumer names now? First it was HUL, then it was Colgate. 2 days ago it was Jubilant Foodworks. Now it is Specialty Food. All the consumer companies are maintaining one line, which is that they are experiencing slowdown.
Absolutely, and I think they are experiencing slowdown, and secondly they are trading at a rich valuation. So I think obviously there was a dream run for them last year, and I think I think large part of the valuation also was driven out of the fact that a lot of money went into defensive from the high beta, and as the environment is turning back, you will see the trade of high beta long and defensive short or underweight, and I think that trade also will hurt. I mean, not to say that I think businesses are slowing down. Secondly, I think the money also will go out. So I think both these factors would definitely harm the consumer sector, and I see probably from this whole of this year consumer to remain underperformer, and I think probably there is a possibility that they might give negative return as well.
Because you talked about this being just the beginning of a downturn for the markets, where do you think the market in the near term is going to find support though?
No, I didn't say that it's the beginning of downturn. I said the correction might remain might still be there for some more time, I think, and I am not sure whether it will be a significant value correction or it will be a time correction, but I see market consolidating around these levels. Maybe, I mean, it's very difficult to predict that whether it will be 3-4% correction or it will turn back depending on how the statements come out in the budget and how it gets outlined. So in my opinion, I think right now market is consolidating. It is very much required and it is healthy for the market, and I would tend to think that probably market will remain in next probably another 2-3% correction might happen, and I think might consolidate around these levels, but I don't think it's the beginning of a significant downturn, so to say. And I think if, let us say, some reformist measures are announced and a roadmap is laid out to the things like GST and some of the structural issue, market might cheer them up post budget, and I think might do well. But I don't think it will be a significant correction, so to say, other than a couple of percentage points.
What about the broader market though, Vikas? Because we've been saying that while Nifty has just been range bound, it is the broader markets which has been, getting punished day in and day out. What would actually snap out the broader markets out of this range? Do you think again it is going to be a positive trigger in the budget, or do you think it's earnings growth which perhaps could lead some of these sectors higher?
I think that's been a big concern. I think, that broader market has not really done well. And I think if you see recently, large part of the money has come in the index heavyweights or the ETF money, which has driven the market. And I think the underlying this fact also remains, I think, probably a discomfort of the investors around some of the structural issues India has, and probably from that perspective, India might not be looked at as a very long-term and structural trade, at least from next 6 to 9 months perspective, because I think what happens, investors are still worried about what happens once the government gets into the election mode. And if you are getting into smaller caps or smaller names, then liquidity again becomes a very big issue. So the investor psyche right now is clearly focused on high liquid names, and should the things not pan out, should the things not work out, they might want a liquidity event. So this psyche is working at, and I think whether our current account deficit situation or the forthcoming political situation are behind it. And according to me, that is unlikely to change in a short time. You might see this kind of situation continuing probably till 2014. So I think large part of the focus, in my opinion, would remain around the large cap, liquid cap names. This is what's right now the institutional investors' perspective, and I see that not changing, at least in next 12 or till general elections. Having said that, I'm not making point that intermittent rallies in mid caps might not come, but I think I don't see a structural wider participation happening in the mid cap till the time complete conviction around the India story returns, both in the institutional minds as well as the retail investors' minds.
Come on, as a house, you guys are expert in mid cap, and now you're giving me a negative commentary on mid caps.
No, I'm not. See, as I said that I think there are always opportunity in the stock specific. We always irrespective of the market, even when we have macro negative view on the market, we would have ideas where we are bullish on, we are long on. So I'm not right now making a point that we will never be long on mid cap. I am just saying that this divergence between the broader market participation by the institutional investors might not take place till the time I think we see structural money coming back to India, and conviction about structural growth story in India comes back. And I think that concern of wider participation will continue to remain, according to me. Having said that, still you will have lots of money making idea within the mid cap space, within the smaller cap space, because that works in any market, any situation, whether it is a bear market or bull market.
Fair point, and thank you for that explanation. I just wanted you to send the right message across to our viewers and to your potential clients as well.
Thank you.
Final question. So far this year, currency markets, bond markets and equity markets have ignored crude. Crude prices are sitting at a 4-month high. Can we afford to do that anymore?
I think your question is very valid. I think our currency is right now very precariously positioned, and I think large part of the currency strength comes from the fact that I think we've been able to get good portfolio flows, and I think our bond limit is opened. And so bond limit is, I think, which some time ago was about 30 odd million, I think has gone significantly higher to around $70-75 billion. And I think we are attracting foreign debt, and I think managing the currency at this point in time. In my opinion, this is a tactical move, and it is not a structural solution, and this also opening significant macro risks for us. If the government of India bond limit keeps on going, and if this keeps on ballooning, let us say in next 12 months time it goes anywhere close to $100 to $125 billion, I think effectively we are opening up our bond market to the foreigners, and this will significantly introduce the volatility to the interest rates. In my opinion, any small sign of macro risk or around India or global will have significant implication on the interest rates in India, and I think that is a structural risk we are creating while addressing this tactical move. So in my opinion, I would run this as a very big risk, and I will be worried about all the time impact of this risk on Indian various asset classes.